Bitcoin trading volume grows during U.S. trading session. The U.S. is increasingly embracing BTC. During the American trading session, Bitcoin trading volume accounted for nearly half, 46%, of the cumulative trading volume this year from January to April. This significant growth in trading activity is closely tied to the launch of spot Bitcoin ETFs in the U.S. market, which took place in January of this year. Keiko research analysts have noticed a pattern: Bitcoin trading volume increases at the beginning and end of U.S. trading sessions. Moreover, BTC trading volume is highest on Thursdays, accounting for nearly 15% of the daily total on those days. While the trading volume of the leading cryptocurrency during the U.S. trading session has returned to 2022 levels, the situation is different in Asia. Bitcoin trading volume during Asian trading sessions remains significantly lower compared to the U.S. market, Keiko notes. This imbalance underscores the significant influence of the American market on BTC trading dynamics. Additionally, Toby Winterfeld, CPO at CC Data, a cryptocurrency data company, noted that Bitcoin's dynamics during the U.S. trading session reflect subdued volatility compared to previous periods. This literally shows the impact these ETFs have had not only on Bitcoin's correlation with the S&P but also on its potential decoupling from other altcoins and cryptocurrencies, Winterfeld said. Since the launch of spot Bitcoin ETFs in the U.S. market 4 months ago, the ETFs have attracted about $13 billion in net inflows. This is one of the most successful debuts in industry history. However, over time, demand has slowed, and in May, net inflows decreased to $1.3 billion. Nevertheless, momentum is picking up again. In just the last 2 days, cumulative net inflows into the ETFs totaled $542.9 million. AI-oriented tokens rise ahead of Nvidia earnings results. Cryptocurrencies focused on artificial intelligence rose on Wednesday despite muted activity in the broader digital asset market ahead of heavyweight chipmaker Nvidia's (NVDA) quarterly earnings report due later. According to CoinGecko, large-cap AI tokens such as FET, Renders RNDR, Bitenzer's Tau, and Singularity NET's AGIX rose by 4 to 5% in the past 24 hours. The decentralized physical infrastructure network, DePIN, token AIOZ network surged 7% during the day after the chipmaker included the project in NVIDIA's Accelerated Applications Catalog, where users can find tools and services built on NVIDIA platforms. The native token of the Layer 1 Near protocol, which generated some buzz when its co-founder spoke at NVIDIA's conference earlier this year, gained 2% in the same period, becoming the best-performing asset in CoinDesk 20, which fell by 0.6% alongside moderate declines in Bitcoin and Ether. Today's broader market pullback followed a dizzying rally over the past few days amid a series of positive regulatory developments in the U.S. and falling bond yields amid easing inflation concerns. Nvidia shares fell 1.5% shortly before regular trading closed on Wednesday, with earnings results to be published after the bell. Patrick Moorhead, founder and CEO of More Insights and Strategy, said in an interview with Yahoo Finance earlier this week that the company will clearly exceed expectations. This year, the shares have risen 90% and more than 200% compared to the same period last year. Coinbase, Ripple, and Meta form coalition to combat scams. The American cryptocurrency exchange Coinbase has formed a coalition called Tech Against Scams, joining forces with major tech companies to combat online fraud. Ripple, Kraken, Meta, Gemini, and several others have joined Coinbase in this initiative, according to a press release from the platform. The main goal of Tech Against Scams is to share knowledge and best practices to protect users. The companies plan to jointly educate users on tactics to avoid scams. The initiative will not be limited to social media, cryptocurrency, fiat, and dating apps. It aims to protect the entire technological landscape. By joining forces, we can create a safer digital environment and prevent scammers from exploiting and harming users, the Coinbase statement reads. Estimates indicate that users worldwide lose $1.4 trillion annually due to financial fraud. The FBI's Internet Crime Report states that last year, total scam losses in the U.S. exceeded $12.5 billion, with nearly $4 billion related to crypto. The Coinbase team also reminded users of the main rules they should follow. Do not download third-party apps. Never send assets to someone you don't know in real life. If you're considering an investment, discuss it first with trusted individuals. Use reliable platforms. Be aware of the schemes scammers use. The creation of Tech Against Scams is a significant step in combating fraud, primarily aimed at creating a safer digital environment. Another prominent player in fighting fraudsters is Tether, the issuer of the largest stablecoin by market capitalization, USDT. At the end of last year, the company announced it had begun cooperating with U.S. law enforcement to identify illegal transactions and freeze criminal funds. Overall, the firm assists authorities in 19 jurisdictions worldwide. Last week, Tether froze more than $5 million in USDT obtained through cyber fraud. Earlier, the issuer also blocked $225 million linked to a criminal syndicate and human trafficking in Southeast Asia. Toncoin forecast: lack of confidence threatens losses. The price of Toncoin failed to update its all-time high despite attempts to overcome key resistance at $7. The likely reason for Toncoin's price growth stalling is a decline in investor optimism, which is evident from their behavior. Toncoin's price is feeling the impact of reduced bullish sentiment and confidence among Ton holders. This is noticeable from the decline in the on-chain metric of average coin age. This indicator determines the level of trading sentiment among long-term investors. It calculates the average number of days that circulating coins have spent at their current addresses. An increase in the indicator suggests that investors prefer to hold the asset. A decrease, on the other hand, means that investors are moving their assets between addresses, and this is considered a sign of low confidence. In Ton's case, the indicator has been declining since February, but overall market signals continue to support Toncoin's price. However, these signals are now weakening, and the lack of confidence could affect price dynamics. Pessimism is demonstrated not only by existing but also potential Ton holders. This is evident from the decline in network growth to a 2.5-month low. The indicator measures the rate of new address formation in the network and helps assess whether the asset is gaining or losing popularity. The indicator fell by 70% over the week, indicating a lack of significant incentives for potential investors. This could affect Toncoin's future dynamics. Toncoin's price attempted to break through resistance at $7 but has been unsuccessful in the past 10 days. As a result, Ton fell below the important psychological support level of $6.50. The recent overall market rally pushed the token above this support, but it failed to hold and retreated below it. This bearish sentiment will pressure Toncoin's price until investor behavior changes. As a result, the cryptocurrency may test support at $6. Losing this support could lead to a drop to $5.40. However, if Toncoin holds above $6 support, it may bounce back to $6.50. Turning this level into support would allow the price to start recovering. In this case, Ton could rise to $7, which would negate the bearish scenario. Pepe forecast: major correction possible after new ATH. Pepe continues to please investors. It not only led the growth of altcoins but also updated its all-time high, ATH, in the last 24 hours. However, Pepe's recent price rally has a downside. The popular meme coin may start to decline as investors seem ready to sell the asset. After the rise, Pepe could come under strong bearish pressure as investors are interested in realizing the profits they've made. According to the on-chain indicator network realized profit/loss, total profit has been growing over the past month. The growth in realized profit indicates that investors are selling the asset, and sales could intensify as the coin has reached a new ATH. This may have saturated the bulls and could now lead to massive sales. Secondly, the market value to realized value, MVRV, ratio also points to profit-taking. The indicator tracks investor profits and losses. The 30-day MVRV for Pepe is at 38%, indicating profit and the likelihood of sales. Historically, the coin has undergone corrections at MVRV levels of 15% to 36%, a range considered a risk zone. Pepe is already above this level, warning of a high potential for profit-taking. If this happens, the altcoin could fall below key support. The market price reached a new ATH at $0.00001430 after a 51% increase in the last 2 days. At the moment, the altcoin has not shown signs of declining, but given the aforementioned indicators, a drop could start soon. The most likely outcome would be a fall to $0.00001251, corresponding to the 78.6% Fibonacci level. Intense sales could deepen the drop to the 61.8% Fibonacci level at $0.00001146. This line is known as the bull market foundation, and losing it could erase a significant portion of the recent price gains. However, if the token bounces off this support, it may have a chance to resume recovery. This has happened in mid-May and could negate the bearish scenario.